Welcome to Earnings Recap. Today we're covering eBay's first quarter 2025 earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel.
Yeah, and you're probably tuning in because you want the key takeaways from eBay's latest results, but, without wading through all the jargon.
Exactly, and that's what this deep dive is for. We're summarizing the crucial bits in plain English.
We've gone through the report, listened to the call, and we're here to break down what really matters, how eBay performed, and what the leadership is thinking.
So we'll tackle this in two main parts. First up, we'll hit the key numbers from the actual earnings report, the financials.
Right, the hard figures.
Then we'll shift over to the earnings call itself, what analysts were asking, what management said, their outlook, that kind of thing.
And it's worth remembering the backdrop here. It's a pretty dynamic time, especially for cross-border trade. You got tariffs, changing rules in the U.S. Those are definitely factors.
Definitely. Okay, let's dive into part one, the numbers. Gross merchandise volume. GMV, the total value sold on the platform. What's the headline?
Well, the headline is growth, nearly 2% growth, hitting about $18.8 billion.
Okay.
And importantly, that's the fourth quarter in a row they've seen positive GMV growth. So there's a bit of a trend forming.
Right, some consistent momentum. But was that 2% the full story? Any external factors messing with that number?
Yeah, absolutely. When you strip out the currency fluctuations, look at it FX neutral, the growth was also around 2%, but the actual reported number got hit by foreign exchange.
How much?
Almost 130 basis points of headwind. So, yeah, the strong dollar, for instance, took a noticeable bite out of that reported growth.
Okay, so underlying performance was a bit hidden by currency. What about other things like calendar effects? Leap days, holidays.
Yep, those play a role too.
Yeah.
Q1 growth actually had a net headwind, about 50 basis points, because they were comparing against Q1 2024, which had that extra leap day. But that was partly canceled out because Easter landed in Q1 this year, which tends to pull some spending forward. It's funny how those little things add up.
It is. Okay, let's talk revenue then. How much money did eBay actually bring in?
Revenue was also up, over 1% growth to $2.58 billion. And that's on an organic FX neutral basis.
And how does that compare to, say, the previous quarter?
Actually, it's an acceleration from Q4. So that's a positive sign, suggests maybe some strengthening momentum in how they're monetizing the platform.
Got it. And currency, did that impact revenue too?
It did, yeah, but a bit less than GMV. Foreign exchange was about a 50 basis point headwind on the reported revenue growth. Still a factor, but not quite as dramatic.
Okay. Now, eBay's been talking a lot about their focus categories. How are those performing? Is that strategy actually, paying off?
It definitely looks like it. Those focus categories taken together saw GMV grow by over 6%.
Wow, over 6%. That's pretty strong.
It is. And maybe more importantly, those categories now make up more than a third of eBay's entire global volume. So that focus is clearly having an impact.
Which categories are really leading the charge there?
Collectibles was the biggest driver again.
Okay.
That's the second quarter in a row.
Okay.
And within collectibles, trading cards, GMV growth there accelerated for the 9th consecutive quarter.
9th? That's incredible. What's driving that, do you think? Partnership with PSA?
That's definitely part of it, yeah. The partnership with collectors authentication like PSA seems they've really tapped into something big there. Makes you wonder how long that streak can last.
True. What about fashion? That's another big focus area for them, isn't it?
Huge. Fashion does over $10 billion in GMV a year for them. They've been making improvements in luxury, pre-loved apparel, streetwear, and it seems those efforts are working, contributing significantly.
And you mentioned specific efforts in the UK, the C2C experience, consumer to consumer. How did that go?
Yeah, they seemed quite pleased with the results in the UK. They made it easier for regular people to sell stuff, introduced a buyer protection fee, ramped up their managed shipping.
And the impact.
It looks like it really improved their C2C GMV trends there. Even better than they expected. Shows that focusing on making selling easier can really move the needle.
Makes sense. Okay, let's pivot to advertising. How's that side of the business looking?
Very strong. First-party ad revenue grew 14%, hitting $442 million.
14%, okay.
And that translates to a GMV penetration of nearly 2.4%. So more sellers are using eBay's own ad tools to get their listings seen. It's becoming a really significant revenue stream.
And I saw a note that the definition of that ad revenue changed slightly.
That's right. For the first time, this Q1 figure includes ad revenue from some of their acquired marketplaces like Q10 and TCG Player. So it gives a fuller picture now.
Right. Okay, shifting again, payments and financial services, any key developments, buy now, pay later.
Yes, they expanded their partnership with Klarna in the U.S. for buy now, pay later.
How's it going?
Encouraging, apparently. They said early results show average order values using Klarna are more than 3 times the site average. So offering that flexibility seems to encourage bigger purchases.
Interesting. And are they getting traction with their own eBay financial tools, like the eBay balance?
They are, particularly in the UK C2C market. They said adoption is ramping up, capturing a low single-digit share of wallet already.
Which helps them how? Lower fees.
Exactly, lower payment costs, and maybe keeps seller money within the eBay ecosystem longer. They also added Checkout.com as another payment partner to boost reliability and authorization rates.
Okay, let's talk profit. Bottom line, how did they do on earnings?
Well, non-GAAP earnings per share, which smooths out some items, grew a healthy 10% to $1.38.
Solid growth. But what about margins?
Yeah, the non-GAAP operating margin dipped slightly, down half a point to 29.8%. So profitability per dollar of revenue was a touch lower.
What was putting pressure on that margin?
A couple of things. Those investments in the UK CDC experience we talked about, that was one factor. And also a change in how they account for depreciation. That alone was nearly a 70 basis point headwind.
Okay.
Partially offset by some help from foreign exchange, about 40 basis points tailwind there.
And the official GAAP EPS number?
That looked much stronger, up over 25% to $1.06. But that big jump is mostly because they were comparing against Q1 last year when they had some embasement losses that didn't repeat.
Got it. Context is key there. All right, how about capital allocation? Giving money back to shareholders.
They returned a good chunk in Q1, about $760 million total.
How was that split?
$625 million in share buybacks and $134 million in cash dividends that worked out to $0.29 per share.
And cash flow, financial position.
Free cash flow was strong at $644 million, and they ended the quarter sitting on $6.2 billion in cash and non-equity investments. So financially, they look pretty solid.
And finally, for this section, some big leadership changes announced, right? Starting with the CFO.
Yes, this was the last call for Steve Priest, the current CFO. Peggy Alford is taking over starting May 12th.
And other moves?
Yeah, they're tweaking the structure. Jordan Sweetnam becomes Chief Commercial Officer. Mazen Rawashta is the new Chief Technology Officer. And Eddie Garcia, the Chief Product Officer, is departing.
Interesting shifts. Suggests maybe a strategic realignment.
Could be. Definitely something to watch.
Okay, that's a great rundown of the financials. Let's move into part 2. The earnings call highlights. What were the big themes, the questions, the management commentary? Let's start with that cross-border trade issue, tariffs, and all that.
Yeah, that was definitely front and center. Management didn't shy away from acknowledging the uncertainty caused by tariffs and the changing customer requirements in the U.S.
What are they doing about it?
They talked about helping sellers and buyers navigate it, mentioning their SpeedPack shipping solution specifically, and efforts to educate buyers about potential duties or requirements. Seems proactive.
So trying to smooth things out.
Right. And they also played up what they see as a core eBay strength, their dynamic global marketplace. Plus, the fact that so much on eBay is pre-loved or non-new. That inventory might be more resilient if consumer budgets get squeezed by tariffs on new goods.
That makes sense. How did they frame the overall economy, the macro picture? Analysts must have asked about that.
They did. Management basically described it as uncertain, hard to predict, with uneven demand geographically. Pretty cautious overall.
But confident in eBay's position within that.
Yes, they expressed confidence in their relative strength, pointing again to that global seller base, the cross-border shipping solutions, and especially that focus on non-new items.
How much is non-new now?
Over 40% of their GMV is used or refurbished now, and they said that segment is growing faster than new goods on the platform.
Wow, over 40%. Okay, what about the specific impact of potential China tariffs? Did they quantify that?
They gave some numbers. Said China-based exporters shipping directly to the U.S. make up about 5% of their global GMV.
Okay, 5%.
And they also acknowledged, of course, that U.S. sellers who source from China would also face challenges from tariffs.
Did they see any impact on ad revenue from Chinese sellers pulling back yet?
Interestingly, no. They said they haven't seen any material impact on ad revenue from China-based merchants so far. Demand for ad products remains strong, apparently.
Okay, let's talk AI. It's everywhere. What's eBay doing with artificial intelligence?
They highlighted how broadly they're integrating it. The magical listings tool came up again, used by over 10 million sellers now, for over 200 million listings.
That's significant adoption.
Yeah. plus AI in marketing, customer support, and new features like Shop the Look and a new AI-driven fashion discovery platform. They even mentioned early tests with OpenAI and their own agentic tech. It sounds like it's becoming quite fundamental.
Definitely sounds like it. So tying some threads together, what did they emphasize as their main competitive advantages right now?
Well, that pre-owned and refurbished mix was definitely highlighted. They even said they plan to market that aspect more aggressively to build awareness.
Makes sense, playing to their strengths.
Exactly. Also, their global scale acquiring buyers who then shop across different categories.
Yeah.
And just the strength of their financial model, allowing them to keep investing.
Did they talk about differences in consumer health between, say, the U.S. and Europe?
They did. Described the overall environment as choppy, but said the U.S. consumer seems more resilient than in Europe right now.
Any specific call-outs in Europe?
Yeah, particularly Germany and the UK. They noted depressed consumer confidence there, worries about cost of living, the economic outlook. Germany especially seems to be facing headwinds, maybe for the third year running.
Right. Tough environment there.
Yeah.
How about the supply side? Are they getting more sellers, more listings?
Listings have been growing double digits since last year, apparently, driven mainly by the C2C sellers, the individuals, who are the majority of their sellers by count.
And what's bringing them in?
They pointed to those efforts we discussed, making listing easier with AI tools, simplifying shipping with things like eBay International Shipping and SpeedPack, plus marketing aimed at that C2C value proposition.
Okay. What about M&A? Mergers and acquisitions. Are they still looking to buy companies?
Seems like it. They said they're still interested in M&A to accelerate capabilities. Yeah, emphasized a disciplined build, buy, or partner approach. They even mentioned fashion as a category where that approach might apply, suggesting they're actively looking there.
Now, what about the big fast fashion players? Temu, Shein. How does eBay see itself competing with them, or are they even competing directly?
Management suggested they're somewhat insulated. They said eBay hasn't been hit as hard by the massive marketing spend from those guys, mainly because eBay gets so much organic traffic.
So people come directly to eBay anyway.
Right. And they also argue there's not a huge GMV overlap. eBay's focus on non-new, on its focus categories, tends to mean higher average prices than what you typically find on Temu or Shein.
Different markets, essentially.
That seems to be their view.
Okay. Advertising revenue, you said it was strong. How sustainable do they think that is?
They sounded very confident. Pointed to strong demand globally and the success they're having across different regions. They also reiterated that goal of reaching 3% GMV penetration for ads.
So they still see room to grow there.
Definitely.
And collectibles, just drilling down one more time since it was such a driver. What's the outlook specifically there?
Yeah, they're clearly very happy with trading cards. Healthy double-digit growth, that 9-quarter acceleration streak.
And plans to keep it going.
Yes. Continued innovation for hobbyists, more integration with PSA, using eBay Live features. They expect that strength to continue.
All right, let's wrap up with the outlook. What did they actually guide for the rest of 2025 and for Q2 specifically?
For the full year, the overall message hasn't really changed. They're planning for various tariff scenarios, expecting that uneven demand picture to continue.
And the numbers?
Still forecasting low single-digit GMV growth for the year, FX neutral. Revenue growth slightly higher than GMV growth, again, FX neutral.
Okay. Profitability.
Non-GAAP operating income growth, roughly in line with that FX neutral revenue growth, still targeting at least $2 billion in buybacks for 2025.
And earnings per share for the full year.
Still expecting high single-digit growth for non-GAAP EPS in 2025.
Okay, that's the full year. What about the immediate next quarter, Q2?
For Q2, they guided GMV growth between -1% and +2%, total FX neutral. Same range for revenue growth, translating to $2.59 billion to $2.66 billion in revenue.
And margins and EPS for Q2?
Non-GAAP operating margin guided between 27% and 27.8%, and non-GAAP EPS expected between $1.24 and $1.31.
Okay, so putting it all together from this deep dive, eBay seems to be showing, well, resilience, right? Continued growth despite a tricky global picture.
Yeah, definitely. Strengths in those focus areas like collectibles and fashion, strategic moves like the UK C2C push seem to be working. They're tackling the trade challenges head on and leaning into AI.
And those leadership changes signal they're positioning themselves for what comes next in a pretty fast-moving digital world.
Exactly. Adapting for the future.
All right, so here's a final thought to leave you with. We're seeing this clear shift towards pre-loved, towards refurbished goods, and eBay is strategically right in the middle of it. How might this trend reshape the wider e-commerce market, maybe change how we all shop in the next few years? What opportunities or challenges could that create for you as a buyer, a seller, or just someone watching the space? Something to think about.